Warner and Comcast beat fourth quarter analyst estimates today, but their stocks are not gaining. What's the outlook for media stocks this year? Thomas Eagan, he's a top-rated industry analyst at Collins Stewart, and he's joining us now to talk about these media companies. So let's start with Time Warner, Tom. Thanks for coming in, by the way. Let's start with Time Warner. The blind side helping boost the bottom line, the company reiterating its forecast, but the stock is down. Was there anything you saw in the report that you didn't like?
Not really in the fourth quarter results. The fourth quarter results were actually pretty solid. The company did, however, give guidance for earnings per share for 2010, which may have spooked some investors. The median range of that was roughly suggested maybe 15%. That 15% growth was a little bit below the consensus range of earnings per share. So it might have been that that range was again at the bottom of the range.
Also, when you have a hit movie like The Blind Side, I mean, this is, I imagine, a risk across the various film companies. I mean, isn't the pressure on then to keep churning it out to keep up the earnings growth? How risky is that?
Well, they have a lot of franchises. Harry Potter is going to be released, of course, in 2010, and then again in 2011. So the company has a lot of franchises, and they're going to be utilizing their assets in the DC comic library to grow that group of franchises even more.
So when you look at the earnings forecast for this year, do you think it's just Time Warner being conservative, or what area is going to cause that little bit of a disappointment? I
think it's them being conservative, and we expect that we're going to see EBITDA growth in the mid to high single digits this year. Now, although that's below what we may see from their peer entertainment companies, we think Time Warner is also a lot less risky. Not only less risky, but also more shareholder friendly.
And conservative also in the sense that they do still have, at least right now, some declining magazine ad sales.
Right. You see publishing declines across this space. The reason why we're interested in Time Warner and it's our top content pick is that we think they're just more shareholder friendly. The increase in the share buyback and the increase in the dividend today reflects that.
Now, I'm moving on to Comcast for a moment. Obviously, this is a company that's now turning more to content with the acquisition or partial acquisition of NBC Universal. What do we hear from the company on that front today, and what's the outlook?
You didn't hear a lot from Comcast about the NBCU merger. Obviously, they don't want to talk about that or about the GE NBC earnings for the fourth quarter. We have a hold on the stock because we're concerned that the stock's going to be in a holding pattern while the merger or the acquisition is reviewed in Washington. That could take 9 to 12 months. You know, interestingly, the programming battles that we've seen over the past couple of months between Cablevision and Scripps and between Fox and Time Warner Cable, we think actually negatively impact Comcast in that they make the review longer.
Well, you mentioned that Washington taking a look at that. Are you expecting anything out of those hearings that start tomorrow? Mr. Roberts and Mr. Zucker are both going to be on the Hill tomorrow.
Yeah, what we're waiting to hear is about concessions the company's going to have to make. We expect that the company's going to have to engage in arbitration should there be any difficult negotiations between programmers and the distributors.
Now, at the same time all of that is going on, the core business actually held up pretty well. Comcast continues to add more subscribers. So, I mean, is that business pretty solid?
It's we thought the results were solid. However, maybe a little bit more mixed than those out of Time Warner Cable the other day. You know, for example, although customer ads were better than we expected on digital and high-speed data, the cash flow of the company grew at about 1.7%, below what we were expecting, which was about 2%.
Tom, I got to ask you about something that jumped out at me. We've had all these new rebrandings of the various cable companies. Comcast has chosen the name Xfinity. What's your reaction to that?
I'm not sure about how strong a brand that's going to be. The company's trying to be everything to all people. We actually do agree with the idea of TV everywhere, which both the cable operators and the cable networks are trying to embrace to eliminate any attempt at piracy.
Tom, we have about 20 seconds left. Might I ask, because Julie did just ask you about the subscribers, how many more promotions can Comcast possibly offer to attract subscribers?
We expect in the first half of this 2010 they're going to be more aggressive in adding subscribers than adding cash flow. So we think you're going to see more bundling efforts in the first half.
Thomas Eagan, Collins Stewart joining us on set. Nice to meet you. Thank you so much for coming in.